Adventurous diners want a food that makes them sweat. But can this buffalo-fueled stock satisfy investor cravings? With a generous dash of digital and a growing dollop of delivery, will Wingstop's corporate recipe fry up spicy returns?
In a hostile market like this one, and can we at least admit it has become hostile, we're always on the hunt for stocks that have shown that they can defy the negativity and actually rally. I'm talking about stocks like Wingstop, the wings and beer chain that's up more than 20% year to date. This thing made a new all-time high a week and a half ago, and it's currently down less than $1 from those levels. Don't you wish I had one like this? What's driving this strength? When Wingstop reported about a month ago, the company delivered a solid top and bottom line beat, phenomenal same-store sales growth, plus 7.1%, more than double what the analysts were looking for. Even better, management's got a bunch of initiatives going that should keep boosting their numbers, like their delivery partnership with DoorDash and their plan to eventually digitize every transaction. Plus, in the conference call, they talked about the company growing to 6 times its current size, which is pretty spectacular for a chain that's already has more than 1,200 locations. Don't forget, international. So let's take a closer look with Charlie Morrison, the chairman and CEO of Wingstop, get a better read on how his company's thriving in this difficult environment. Mr. Morrison, welcome back to Mad Money. Good to see you, Charlie.
Good to see you.
Charlie, when we first saw you, the stock was at 25. And you expressed a level of confidence. I said, no way, can't do. It's all come true, but it turns out that it was really that you've been in business for 25 years, not the small time that we've met each other.
That's exactly right. We're celebrating our 25th anniversary this summer with new products, 25 unique flavors that people are going to learn a lot about over the course of the summer months. And we're just getting started. 25 years behind us, a long way to go.
Well, this number, talking about the 6 times, that's because you're really nowhere international, and yet I think this one travels fabulously internationally.
I think, obviously, the entire product line is very portable. We've identified that already in the 9 countries that we serve outside the U.S. It's obviously been portable in the U.S. We operate in over 43 states. We have a ton of white space for growth. We expect that the U.S. and domestic footprints can be about equal size when we're done.
Well, I thought it was interesting you're talking about being top 10.
Absolutely.
Well, you know, one thing it tells me you can do that. You have tremendous transparency. I know you're in town for a conference, but industry leading track record. I know this is difficult for my cameraman. Industry leading track record of same-store sales growth. You're beating Domino's, Starbucks, Burger King, Taco Bell, KFC. I mean, you're way ahead of everybody. How is that possible?
Well, we're in a brand where we believe we're in a market all by ourselves. We really don't have a true competitor. And if you look at those brands on the page, the ones that tend to succeed the most are the ones that take an active position to connect with consumers, deliver a product that's unique, and fortify a space around them. And a brand that has the portability we just talked about to be able to continue to grow.
Well, let me ask you, I'm seeing my old friend Sally Smith later this week at Buffalo Wild Wings. They must have given you a run for the money. They're now private.
They're a different brand, though.
Okay.
We're not a bar. Our restaurants are about 1,750 square feet on average, cost a little less than $400,000 to invest in, do an average unit volume of over $1.1 million. It's a very efficient carry-out and now delivery-focused concept that we believe creates efficiencies that some of the big box players just can't compete with.
How did you select DoorDash? And just give you a sense, we've been to see Grubhub. They've got some pretty good artificial intelligence. They're kind of saying, well, the DoorDash is you don't get the restaurant doesn't get the information they need. Is this a partnership that can make it so you have good artificial intelligence, find out what people are thinking?
We believe it's a fantastic partnership with DoorDash. What they focus on is making merchants successful. As the merchant, that's exactly what we want, and they take care of the logistics. In our partnership, we've made sure that we are always working together to ensure that no matter how you access Wingstop, whether it be carryout or walk-in or through delivery, you're going to get the same great experience, and we believe they're best positioned to provide that.
Okay, so tell me about, you keep talking about digitizing. What does that really mean? Isn't everything digital?
Everything can be digital at the end of the day. We still take a lot of phone orders. A lot of people still walk in.
Oh, so like Domino's has done.
Exactly. So every time somebody accesses us, we want the opportunity to digitize that transaction. Why? Because a digital transaction tends to have almost a $5 higher average ticket, more profitable for our franchisees, which means better return on investment, more new restaurants to grow with.
Why do you think that is, that it's so much more lucrative?
I think people spend more time with the menu. And they get to know the menu, they add a couple items onto that, and they're not as intimidated by the phone call and the rush that they see at the front counter.
You guys have had very good success now that you're so big in TV advertising. Is that the way to go, or should we be doing some internet?
Well, we've been a socially active brand as it relates to social media for many years. We've become large enough and have scaled to national advertising.
That's what it takes.
Our franchisees generously added 1% to the advertising spend, so they now spend 4% to a national fund. That has been redeployed into fantastic new media, new creative, which is really helping drive that same 7.1% comp that you saw in the first quarter.
Now, you did talk about, and you've talked about very honestly, labor costs are an issue. Mm-hmm. So what do you do? Well,
in our brand, we're pretty well insulated. We have a very small roster already. So, and in that small footprint, it doesn't take a lot of people to operate a Wingstop. So I don't know that you'll necessarily see us doing anything to remove the number of people in a restaurant, but we do believe through digital technologies and further digitization of our business, we can create efficiencies that create capacity that help us to grow, which will take pressure off the labor line.
Yeah, we have this thing Beyond Meat. It's going crazy. Now, today was the first day it was down. I mean, are we going to see like artificial chicken? Is that, and are you developing, is that what people want?
I don't think there's a market out there for an artificial chicken wing right now, Jim. I think we're going to stick to what we do well, wing sides and fries, and making it just the way we do
What's
today.
the demographic in terms of, what's the age? What age group don't like Wingstop?
We haven't found one yet that doesn't. I find everybody loves wings, and that's a big piece to our advertising is the opportunity to expand the brand and give permission to everybody to enjoy our great product.
The reason I mention this because there's someone who owns some restaurants. People, this new generation, I'm not just millennials, but they like to be at home, Charlie, and that's something you've really tapped into.
We have, and through delivery and carryout, providing access to unique, distinctive flavors, that's what young people want today. And they want accessibility.
But last question, what people want today is this company that returns a lot of capital. You do that too.
We do. We've returned fantastic returns for our shareholders since we've been public. Over 250% return to our shareholders and continuing to grow.
Well, this has been the winner in the category. We talk a lot about Wendy's I like, McDonald's I like, but it's Charlie Morrison, Wingstop Chairman and CEO, that's done the best. Happy 25 years.
Thank you very much.
Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.